Following our discussion of the different types of licenses regulated by the Arizona Department of Real Estate, ADRE, it is important to understand how Arizona law governs compensation when a licensee chooses to operate under a professional limited liability company, PLLC, or a professional corporation, PC. These business structures allow real estate professionals to receive income in a tax-efficient and organized manner while maintaining compliance with ARS Title 32, Chapter 20, and the Arizona Administrative Code, Title 4, Chapter 28. However, the use of a PLLC or PC for compensation purposes is strictly regulated, and licensees must follow precise legal and administrative requirements to avoid violations. Under ARS Section 32-2155A, a real estate salesperson or broker may only receive compensation for licensed real estate activity from their employing broker. This statute ensures that all financial transactions related to real estate commissions flow through the supervising broker, allowing the ADRE to maintain oversight and accountability. However, the law permits a licensee to have their compensation paid to a legal business entity they own, provided that the entity is properly registered and named on their license as a professional limited liability company, PLLC, or professional corporation, PC. This arrangement allows licensees to structure their business income through a separate legal entity while maintaining compliance with ADRE regulations. To establish this structure legally, the licensee must form a PLLC or PC under the Arizona Corporation Commission ACC in accordance with ARS Section 29-4101 ETCQ for PLLCs or ARS Section 10-2201 ATCQ for professional corporations. The entity must be created for the specific purpose of conducting licensed professional activity, in this case, real estate, and must list the licensee as the sole member or shareholder. The ADRE requires that the entity name exactly match the one filed with the Corporation Commission, and that the entity's name appear on the license as the doing business as or professional entity designation. The department allows this arrangement only when the licensee's employing broker authorizes payment to the PLLC or PC. Under Commissioner's Rule R4-28-301D, all compensation for real estate activity must be paid through the broker, who may then issue payment to the licensee's approved entity. This ensures that the broker retains full responsibility for compliance with the law while allowing the licensee to structure their income appropriately. For example, if Sarah Johnson is a licensed salesperson at Realty One Group and forms a PLLC called Sarah Johnson Real Estate PLLC, her broker can legally issue commission payments to that entity, provided it is listed on her license and in good standing with the Corporation Commission. It is important to note that the PLLC or PC cannot independently engage in real estate brokerage activities or represent clients directly. These entities exist solely for compensation and tax purposes, not for conducting brokerage operations. All client representation, marketing, and contract activities must still occur under the authority and supervision of the employing broker as required by ARS Section 32-2123B and R4-28-1103A. The broker remains responsible for ensuring that all licensees, whether paid individually or through a professional entity, comply with statutory and ethical standards. The use of PLLCs and PCs is often motivated by tax planning and liability considerations. For instance, a licensee may wish to receive commission income through a PLLC to benefit from business expense deductions, simplified accounting, or income distribution options. However, it is crucial to understand that forming a PLLC or PC does not shield the licensee from professional liability for real estate misconduct under ARS Section 10-2210 Professional entities do not protect individuals from personal liability for their own negligent or fraudulent acts. Therefore, if a licensee violates the Arizona Revised Statutes or Commissioner's rules, they remain personally accountable to the ADRE and subject to disciplinary action regardless of their business structure. Additionally, the ADRE prohibits any form of unlicensed entity compensation. Under ARS Section 322-163A, only individuals or entities properly licensed by the department may receive compensation for real estate activities. This means that the PLLC or PC must be directly connected to the licensee's name and license. Payments cannot be directed to a general business entity, partnership, or team name, unless that entity is separately licensed or approved by the ADRE. Failure to follow these compensation rules can result in disciplinary action against both the licensee and their employing broker under ARS Section 32-2153A17, which prohibits paying or receiving compensation contrary to law. To illustrate, consider a licensed associate broker named Michael Torres who works for Desert Vista Realty. He forms Michael Torres Real Estate PLLC and adds it to his ADRE license. When Michael closes a transaction, his broker pays his earned commission directly to the PLLC. This setup is fully compliant because the entity is properly registered, reflects his license name, and is approved by the department. However, if Michael created an unrelated business called Sunset Investments, LLC, and directed his broker to send commissions there, it would violate Arizona law since that entity is not a licensed professional entity listed on his license. This structure also applies to professional corporations, PCs. A PC operates similarly to a PLLC but under corporate rather than limited liability law. The PC must be owned entirely by licensed professionals in the same field and must be properly registered with the Arizona Corporation Commission. Just like a PLLC, a PC may receive compensation only if it is listed on the license and used exclusively for real estate income associated with the licensee's work under their employing broker review summary. In this section, you learn that Arizona law allows licensees to receive real estate commissions through a professional limited liability company, PLLC, or professional corporation, PC, listed on their license, as authorized under ARS Section 32-2155A. The employing broker must approve this arrangement and remain responsible for compliance. The entity must be registered with the Arizona Corporation Commission, match the name on the license, and be owned solely by the licensed individual. The PLLC or PC cannot engage in brokerage activity independently and does not protect the licensee from personal liability for professional misconduct. Payments to unlicensed or unauthorized entities are prohibited and may result in disciplinary action under ARS Section 32-2153A17. Discussion. Why does ARS Section 32-2155A require compensation to flow through the employing broker? Answer. To maintain accountability, ensure compliance with ADRE regulations, and prevent unlicensed or unauthorized compensation. Can a PLLC or PC conduct real estate transactions directly with clients? Answer. No. These entities may receive compensation, but cannot act independently of the employing broker's supervision. Why must the entity name appear on the license exactly as registered with the Arizona Corporation Commission? Answer. To ensure that the entity is verifiable, legally recognized, and directly linked to the licensee for ADRE compliance. Does forming a PLLC or PC protect the licensee from liability for professional misconduct? Answer. No. Under ARS Section 10-2210, a licensee remains personally liable for their professional actions, regardless of business structure. What happens if a licensee directs compensation to an unlicensed entity? Answer. it constitutes a violation under ARS Section 32-2153A17, and both the licensee and broker may face disciplinary action. Closing remarks. The option for licensees to receive compensation through a PLLC or PC reflects Arizona's effort to balance professional flexibility with strict regulatory oversight. While this structure offers tax and administrative advantages, it does not alter the fundamental legal rule that all compensation must flow through the employing broker. The ADRE's system ensures that every transaction remains transparent, properly documented, and tied to a licensed professional entity. For Arizona licensees, understanding this rule is essential to maintaining compliance, protecting their professional standing, and managing their business operations effectively within the framework of the law.